Solid little start to the week, no further damage. NVIDIA a little bit sluggish, but that's going to be an earnings story. Let's go through the risk radar and look at the technicals, where we set up and what I'm watching. I'm also going to be doing the shows from Impact over the next couple days. Tomorrow morning, MTL here, but then Wednesday, Thursday, we'll be at the RIA conference in San Francisco for Schwab's Impact. So if you're around, let me know. Green everywhere except for bonds. Though last week I pointed out the ascent of the 10-year might slow a little bit. Let's look at stocks first real fast, though. S&P 500 on a 3-month chart, I think, points out the pretty clear level that had a lot of sideways action last month, from basically October 14th through the end of the month, with the exception of that little swoon we had going into the election. So the gap on the election we're holding right now, that's important. Basically, if we get to 58.50 or below, I think the light goes yellow on stocks because of all that trading that was going on. 58.50 prior to election. If we slip down into that, likelihood that that could become a sticky area, or at least, or at worst, act as a resistance on the way down. That's kind of what I'm looking for stocks. But green, as long as we hold the election, the majority of the election gap. But 58.50, I think you probably go yellow on the potential sideways movement if we fall into that range. 10-year yield. I'm watching this very closely. It just can't quite punch through the 445 from the post-election high. Part of that's happening because the short end is moving higher, which is the reflection of December maybe not being a cut and maybe the Fed being done. That's what I've been talking about the last 2 weeks, that December should probably be more like a 50% chance. But the irony in the long Treasury yields is that the short end coming up is going to pinch the curve a little bit. Even if yields on the long end do drift higher, the curve is naturally going to flatten out if the short end's coming up. That means we might start to price down economic expectations, which could slow the ascent of the 10-year. So the curve shape is what I'm most compelled about right now, which is that we probably get flattening as the short end comes up. But we could also just keep it proportional, kind of drift higher in yield. Bottom lines, we're having trouble getting through 445. So if yields take another meaningful leg downward, maybe the light goes yellow for bonds, but it's bonds. There's a whole range and a spectrum of bonds, so the curve is going to be a lot more important here in gauging how it matters to markets. Dollar, long story short though for bonds, is maybe be a little bit careful shorting the TLT at this point. US dollar has had such a powerful move way up into the upper end of its 2-year range that pulling back some seems pretty natural. My dollar chart, which has gotten pretty volatile, obviously, 105 seems like an area maybe the dollar could drift back down to and test to see if there's support there. That was kind of a resistance point we went up against a few times. Those 3 candles there in the middle of that kind of inflection point in early November, a couple weeks ago. So that's kind of the area that you should probably find some support for the dollar 105 if it does pull back. Dollar, I think, is going to be volatile. There's a lot of competing views about the dollar right now. But if the Fed's going to take December off the table, or if those chances come down, dollar's likely to go up in that scenario, or at least not go far down. The Bitcoin trade right now looking pretty solid, really just in the world of its own. And this is kind of just up to the coiners. How much discretionary power do they have left? How well of a job can they do convincing the world that the government's going to get on board? How much can they convince people that the government getting on board is not hugely antagonistic to the Bitcoin view? But that's a fundamental thing. I never really thought Bitcoin's arguments make a lot of sense. What does make sense for Bitcoin is more people talk about it, and the better job they do selling it to the next person is what matters most. And so you gauge that type of energy by momentum. And that's why RSI, I find, is so important, still has not gotten above the ETF moment earlier this year. So even though there's a lot of excitement right now, the power of the move into the ETFs was actually bigger. So Bitcoiners might be a little disappointed if it doesn't keep ramping up right now compared to what they got in the months leading up and through the ETFs. So Bitcoin's green, but I'll be wary of any potential slowdown, rollover. Have a great night. See you in the morning.